And this is, thank you, the Protecting Your Pets session. And I just take a moment to introduce our two panelists. And we need to probably move the slide up a little bit. There we go. So to my immediate right, as you can see, is not actually Matt Gendron. It's very difficult to replace Matt Gendron on any kind of panel, but if anybody can do it, I'm sure it's Superintendent Elizabeth Dwyer, who is joining us today. And then next to the superintendent is John Hayworth from the Oregon Department of Insurance, and he is their insurance licensing and regulatory tax manager. And then the next slide will give us, I think, our objectives for the day. By the end of this session, you should be able to discuss regulatory response to the growing demand for pet insurance. We hope that you will gain some insight into licensing and market conduct standards. And this is the first year of the MCAS collecting pet insurance information. So there's a few slides and some talk in regards to kind of what we're seeing. It's all very fresh, and it's the first time companies have been producing MCAS information, so it's just real green. So we'll bear that in mind. And with that, I will turn it over to Superintendent Dwyer.
Thanks so much, Randy. So my name is Beth Dwyer. I am not Matt Gendron. I'm very happy with that. His plane just took off from Chicago. I could have, if he had asked, I would have told him don't fly out of Rhode Island this morning, but he did not. So, but anyway, I've been the superintendent in Rhode Island for about 10 years, but I was the general counsel starting in 2000. And so I kind of have a long history with this issue, which we will get to in a second. But let me first have John introduce himself.
Thank you very much, Superintendent. Again, my name is John Hayworth. I'm out of the Oregon Division of Financial Regulation. I've been in insurance since 1989. I've been a regulator since 2002. I've done a lot of market conduct. I've been in a lot of work groups here at the NAIC. Also participated in some of the white papers for pet insurance and the development of the model law and some of the other discussions that we'll be getting into later. So thank you.
So before we begin, I was wondering if you all could tell me who you are. How many of you are market conduct regulators? Not as many as I thought. Wow. How about financial? That's almost even, which kind of surprised me. Any attorneys? Okay. I just want to get an idea of who's doing what. This is a relatively new issue. So as the slide indicates, the Pet Insurance Model Act was adopted in 2022. But what happened prior to that is for a number of years, pet insurance didn't even exist until the 90s. There was a company out of California that started, I believe it was called VPI, Veterinary Pet Insurance. It was the first company to really issue the product, and it's pet health insurance, of course. It's not equine insurance. It's not the policies that have been issued on horses and livestock forever. So it was kind of the wild, wild west. California did have a model. No other state in the country had a model. And, you know, the reputation was, well, if you buy one, you might not get all that much value out of the product, which is concerning. You know, there were no standards for the product. But the reason it came to a head and we actually started doing a model law at the NAIC is one of the pet insurers came to the Producer Licensing Model Act Task Force and suggested that we mandate education for pet insurance. Well, the reason that's very difficult is there is no line to sell pet insurance. So if you're a producer, you have to do 10 CLEs, but not in a specific area. You just do, and I shouldn't have said CLE, I am a lawyer, so it's CEs. But you're not required to do them in any specific line. We have had multiple people come to us and say, no, have people mandate this. That is a very hard thing to follow and to mandate, especially for insurance agents that sell multiple lines. Others in the industry came to us and said, wait, if you mandate a requirement to sell pet insurance, you're actually disadvantaging part of the market. That sells in a different way, that sells direct to consumer through managing general agents. We heard all of that testimony at the Produce Licensing Model Act, and I was chair at the time, and I did not think that the best way to resolve pet insurance was through a licensing issue. So we sent it to the Property and Casualty Committee for a white paper. And why don't I turn it to John, who was involved in that white paper?
Thank you very much. So, as you can tell, there's kind of a past history, because also while it was going on, when I was in Washington State, I'd start tripping over these products, and I'm trying to figure out, what are they? They're inland marine, and some people I'd reach out to are saying, well, that's not regulated. And I'm going, but it's an inland marine product. I mean, how can it be regulated? I could actually see the filings. And it's a P&C type product. And so we started looking at these entities and started looking at some of the social media sites and so forth. Some of these companies would have representations of coupons and so forth to reduce premiums and things like that. And we started looking at it a little bit more, and we get kind of these complaints, but kind of Superintendent Dreyer said there wasn't like a pet insurance line. So if you had a complaint, it would fall in like inland marine or something, which also includes like travel and so forth. So we kept looking and finding that some of these entities didn't have licensed producers, or there was the representation that the receptionist at the veterinarian's clinic or whatever would say, hey, this get paid free if you get this insurance, which, no. So the way I understand it was the industry kind of wanted to educate regulators in one way or another of saying, well, this is kind of how it works. We had some industry reps that basically say, hey, this is the size of the premium that was actually generated by what you would call a pet insurance line that's yet to be defined, because we didn't specifically have a line in the financial statement blanks under the state page 19. It was just all inland marine. So it was kind of a guess. So we sat with interested parties, regulators, some of the brands, because that was another challenge, was some of these products were marketed under a brand name, but there may be there are 2 or 3 different underwriters. So it was always kind of challenging trying to figure out who was ultimately responsible for the paper that was actually going out. So that was kind of the formation of creating the white paper for pet insurance.
So after we created the white paper, the next step was to really look at some of the big issues. And some of those issues are waiting periods. So some of the policies had waiting periods before you could make a claim. Others did not. It was kind of all over the place as far as the amount of time. Pre-existing conditions, again, that could be very hard for the consumer. It wasn't clearly defined. Some had pre-existing condition bars, some didn't. And then wellness versus insurance. So a lot of the MGAs, the managing general agents that were selling these policies, were also offering wellness riders. And they kind of look like a FSA type program. You pay, $90, you can get $100 worth of coverage is the wrong word because they say it's not insurance. Products. So these would be things like nail trims, vaccinations, that type of stuff, that your day-to-day coverage for your pet, not when the pet is ill, but when the pet is just getting general coverage. So these were some of the main, or some of the big issues that we wanted to tackle in the model law, and they are addressed in the model law. And so what we did was put together a working group led by Don Beatty of Virginia, who has since retired, but I hope we didn't force him out with this. We may have. It took quite some time. There was a core of maybe 15 to 20 regulators from all over the country that really put a lot of work in. I think you guys were having weekly or biweekly calls.
Sometimes it'd be bi-weekly, and as Superintendent Dreyer talks about, like waiting periods, that was like a sticky point, and they were looking like having a 6-month waiting period. And I'm trying to think, okay, how would you, with a P&C product, have a waiting period for a P&C product? So like, do you have a 6-month waiting period on your car or homeowners? But here, Fluffy would have a waiting period on what would be like an emergency type condition, if you follow. So there was a lot of discussion on topics like that.
So the other issue that came up was the issue that originally brought this to the NAC's attention, which is producer training. I mentioned, mandating producer certain types of continuing education for producers is really, really difficult in our licensing procedure. As I said yesterday, we have come so far in licensing in producers. It is so much simpler now for the producer, for the companies. We do get a lot of requests to add things in that would slow down the entire process, but most of the regulators are pretty against that. So what we did here was there really isn't an argument that agents shouldn't understand the products. Instead of requiring the agent to be the one to get the training, we're requiring the insurer to make sure that the agent is properly trained. So on a market conduct exam or inquiring thing, if you get an agent that say, well, I just didn't understand that, the next thing you do is go to the underwriting company and say, well, what is it that you train this guy? But so that was kind of our compromise on that. I don't know if you have any.
Yeah, definitely. It's just the same thing. Like if you have a health carrier, you can have an independent agent that represents multiple health carriers. You kind of expect that this producer understands the coverage types. And that's kind of all we were asking for in this guy. Though it was rather interesting as we kind of went down that direction, we actually had some in industry saying, well, there isn't even a question regarding pet insurance on a producer license. And it's like, okay, how in the weeds do you get? I mean, how many lines are out there? And pet insurance wasn't really even a line then, if you follow.
Yeah, and I don't know how many of you in your states have done the producer licensing exams, actually sat in and looked at the questions, but I have. And the questions on the P&C licensing exam are on auto and home. It's not shocking. Yeah. That's what they're on. Some states are still requiring the P&C license, but there is not a question about this type. If you had someone who was just selling a pet policy, they would have to learn about auto and home in order to pass the licensing exam. My state actually has a limited license for pet insurance for that reason. I think we're one of only 7 states that has it, though. So let me go back one slide. That's so cute. That's Matt picked that out.
Yeah.
There was also a free look period discussion. And, there are free looks in, I believe, long-term care insurance and maybe 1 or 2 other lines. But they're not that common in the insurance industry. Once you've purchased the policy, usually you've purchased the policy. We felt that the lack of understanding around pet insurance deserved a free look. So the model provides for a free look up to 30 days. We actually lessened ours to 15. I'm not sure, do you have a free look in yours?
No, there is no change. In fact, there's a slide that talks about the difference later on.
So it's a cute picture. Okay. As of June of 25, there's 16 states that have adopted regulations based on the NAIC model. They are listed here, and Matt has also listed the 4 states that are considering or where the legislation is pending. Be careful with this in that a lot of these statutes are different from the model. They're not exactly the model. So a number of them, they're all based on the model. But for instance, I just mentioned that our statute has a 15-day instead of a 30-day free look. Another provision that I think industry has heavily lobbied is a provision in the model that does not allow the sale of the wellness product with the insurance at the same time. I think most of the states have taken that out of their model. So if you're reading the NAIC model, make sure you check your own state's actual law before you know exactly what's in it. So here are a couple of changes that have been implemented. Hawaii, Matt found it very interesting that I guess Hawaii, we have the Hawaii commissioner here, but my understanding is Hawaii puts kind of a fake effective date. So when the bill was pending, it had a 2050 effective date, but it came back and it is effective in January of next year. Illinois, the bill was introduced to create the statute with provisions from the NAIC model, but it's still pending. That hasn't passed yet. New Jersey added limitations on pre-existing conditions and exclusions. I believe they also added something from producer licensing. I think it says something about what type of license you have to have. New York had a bill. My understanding of the bill was actually vetoed, but there might have been a lot of misunderstanding between equine insurance and pet insurance. So that might be the reason it didn't pass. But our understanding is it's going to be reintroduced. As I mentioned, ours passed, but it does have a slight difference, which is the 15 days. The part about the sale of the policies actually is in the Model Act. It's just most states have taken it out, and we had not. Matt put lots about ours. I don't know that everyone cares this much, but.
Well, part of it is when you start looking at some of the differences between the model law, there's some states that stand out. And so the perspective is, though it is a model law, there are some slight deviations from it. So it's not just a one and done type perspective. So that was kind of one of the things. And as Superintendent Dwyer pointed out, the free look period is different for Rhode Island too. And so we just want to make sure that if folks are thinking, oh, well, it's 30 days. Mm-hmm. Not necessarily. So again, you need to look at the actual legislation. And as is pointed out, when we were looking for Hawaii's legislation, we were finding all these multiple drafts of effective dates. And that's where we actually reached out to Hawaii and going, okay, what is with these proactive dates that were 5? There's even one listing for the year 3000, which I'm going, okay, was that like a typo in a PDF or something? But they have a placeholder. So we just wanted to verify that.
So producer licensing, again, this has actually been a pretty big issue with pet insurance. And I think it's because a property and casualty license is a round peg in a square hole. The people with the P&C licenses certainly have they have all the ethics, that's great, but you do not learn anything about a pet insurance product while you're studying for the P&C producer licensing. This gives you a chart of what states are requiring what. Most states are requiring a major line of authority or property and casualty. As I mentioned, we have a limited line. The limited line started with 3 states. I think we're up till 7 now. We haven't had any issues. It doesn't mean we won't, but we just felt that because of, we're requiring people who are selling just pet to learn about auto and home, we thought it was a step too far. So many pet policies, as I believe John mentioned earlier, are sold by business entity producers. So did you mention Trupanion? Who did you mention earlier?
What I was mentioning was some of these Pet Plus plans and things like that are basically marketed by a brand name, mm-hmm. and then they have a underwriting company or two under it. Trupanion, well, one, it's a holding company. American Pet Insurance is the underwriter, but the actual producers are called Trupanion. So when you're trying to follow the who, what, where, when, and how, and the consumer has a complaint, how do you record it? And so for a while there, a lot of states would put in like it'd be under the producer. And this is the complaint, when in fact it oftentimes would really have to go to the actual underwriting company. The challenge was, for a while there, we didn't actually have a complaint code for pet insurance. So then the challenge with industry would say, well, we're not hearing about a whole lot of complaints. Well, because sometimes the consumers weren't really sure who to complain to. So it's that traceability factor.
Yeah, and other, mainstream, that's probably not the right word, but insurance companies actually sell pet products directly. So it's not one size fits all. There are multiple ways of marketing this product, which does make complaint handling a little challenging. Sometimes it takes you a few calls to figure out exactly who your underwriting company is and who your producer is.
Yeah, in fact, when I was in Washington, I used to get some requests from some of the monoline companies. They just wrote pet insurance, and they're going, well, do we really need to have our capital and surplus so high to be admitted into the state? Because, we just write pet insurance. It's got a short tail. And we're going, well, but it's still a P&C carrier. And there's also been some other discussion about RBC charges and the E-Committee and what have you, which I'm not sure we really want to go down that road. But these are the discussions that seem to be evolving around the pet insurance universe, for lack of a better description.
And pet is like some of these other, I'll call them niche lines. They don't fit neatly into either our financial or our other statutes. So I've heard the same issue on the capital and surplus requirements because they're inland marine. Yeah. It really acts more like a health company. But because it's short, it's the health of a pet. It's a 1 year, but it's not a health company. It's not a human health company. So there are challenges there, and I'm sure there'll be a lot more discussion about it.
Well, and as I've said to some folks, Fluffy didn't actually sign the app.
Yeah.
And so it is considered property, unfortunately. Though a lot of people think it's like their dependent child. So you have to give people grace in that respect.
Yeah. And honestly, I think what you just said is the reason for the growth. I mean, the growth in this premium is amazing. It's 20 to 30% of a year. 2023, it was 3.9. 2024 was 4.7. Financial annual statements just started in 25, so 9.2 is going to be pet, breaking it out into the inland marine line. We'll see where it's going there. But there was a major carrier in New York that the second line that they added was pet insurance because millennials, am I getting that right? Who's the young people? Nick, what are you? You don't know? Whatever young people are, they're buying pet insurance. Pets are part of the family, and people are purchasing this product, and that's why we really think that this is the time to have standards, right? We need to have of course, you have to read your product just like any other product, understand what's in it, but at least with this model, you have standards, so you know generally what's going to be in it. Let's see. Oh, here's another cute picture. I personally would have put a picture of my dog, Chloe, but that's okay. So MCAS results. Some carriers were late for filing MCAS in 2025 and requested extensions. I believe this is the first year, though, right? Yes. So, that's always the case. When you start getting new data, you got to really work with companies to make sure they're filing the right kind of data. But we will have better data on the pet insurance marketplace after we're able to get in this data, clean it up, and really do an analysis. Do you want to talk about that, John?
Yeah, and high level too, because as I stated, you have different entities that are marketing these products. So you may have third-party vendors also processing those claims. And so aggregating that data up through one channel always is a challenge the first year. Now, you also have other companies that they write a full range of P&C products. So this isn't really a new thing for them. But for those that this is their first shot at that rodeo, we had to spend some time, and we did have some entities that had to file a couple times, and that's where you're scrubbing the data and trying to figure out, okay, well, you've got more policies than what your premium suggests. Things look converted. Why are you charging so much premium and you only had 4 policies? Things like that. People do fat finger this stuff when they upload it, so it's just an educational perspective.
And having both the MCAS and the financial data with pet broken out in inland marine is really going to assist us in understanding who's writing what. Those numbers, we can now compare those numbers, make sure they match. If they don't match, we can go back and ask questions of the companies. But that's the kind of data that gets us to really understand our market. So we're hoping in the next few years that'll be the case with pet.
Yeah, because as I said prior, we were going with what industry said. NAPFIA is their trade group that was saying, yeah, premiums are growing exponentially, and they'd give us the figures, and we're going, okay, because I could look at inland marine, and I'm going, well, I don't know for company X, is pet insurance half of that? Well, but they also sell travel insurance. So if you had inland marine and travel insurance and other miscellaneous coverage types in the inland marine space, you're kind of flying blind. So as the superintendent established, yeah, we're getting MCAS data. We're now getting the financial data on the actual financial blanks through the E-Committee. And then here we've got the observations on the pet MCAS. So kind of going through it, ratio 1 just talks real high level about claims closed without payment to total claims closed. And nothing really too surprising, average about 30% of claims. So they may have had a deductible, they may not have been eligible, there may have been a waiting period, something like that. Ratio 2, high level, percent of claims paid beyond 60 days. And this is typically on kind of a reimbursement type thing. And about like 0.58% of claims with a minimum of 0.25, minimum of 1.2. By and large, you had most of your claims paid in a rather quick time frame, which is really good. But then, you look at it though, you took the pet into one vet. You didn't take the pet really to as like a hospital, and then you had to get an MRI, like in the healthcare perspective. So it's a little bit easier to follow. Non-renewals to policies in force was actually pretty low, 4.7%. Ratio 4, which is percent of cancellations during that free look period, was about 7.8. So again, out of 100 policies that were going out the door, about almost 8% on average would be returned during that free look period. And then ratio 5 is kind of a little telling. Cancellations at the policy's request was about 66.7. So there were either some people that once they started using the product said, maybe that's not what I want to do, or they didn't see necessarily the value, or maybe the rates had gone up, or some other aspect that allows us to explore what those potentials might be.
And I don't know how many of you have looked into getting a pet policy for your pet. I have. These are very expensive. They are not cheap policies. If it is a cheap policy, you really should be looking at the coverages. What it does do is I personally have gone in and had to pay thousands of dollars for my dog having some. It really spreads the cost of something like that. You might be paying $100, $200 a month instead of $4,000 at once. There's good reasons to have the product, but if you think that this is a inexpensive product, it is not. Oh, that's cute too. Yeah. Isn't that nice of Matt to pick out all these? We actually had someone in our office, by the way, whose dog bit somebody, and he did that. It's not that dog, but we did have someone do that.
Yeah, but liability policies for pets, that's a totally different subject.
Yeah, it's totally different. Totally different. It was a cute little dog, and it ran out and just nipped this. It wasn't like a vicious dog. That's why he put the little thing up. Made him look like he was in dog jail.
Yeah, and we're not going to put the top 10 dog offenders or something on a webpage.
No.
But
so this is a compilation of market actions, and so I'm going to let you talk about it. You were in Washington, right?
Yeah, I was. And so kind of a synopsis. So again, the superintendent said, hey, this is the past history, the why. Why did we have some sort of model law that went through? And now we're kind of following up on some of this stuff as to what some of the situations we found. So we're running into situations where we have entities that are in the pet insurance space that are unlicensed. I've had other states call me up and they go, John, have you ever heard about XYZ? And it's like a health savings plan for pets, like a health service ministry type thing. And I'm trying to process that because that's a very specific thing. And I'm going, okay, well, they still need to be licensed unless there's some sort of exemption requirement, right? And so that was where we started going through different social media pages, trying to figure out what is this? And do people actually get payment? Because in most states, if a contract goes out the door, it's enforceable. It might not be regulatorily compliant, but we're trying to figure out what is this? And then, of course, who is selling this? What's the commission schedules? They're not paying premium tax, if you get where I'm going. There's a whole bunch of things going on. So that was kind of where some of these top ones were. And other states have also been looking in this space as well. So it doesn't exactly follow under market conduct annual statements, because if they're not a licensed entity, how would you file it? We don't get financial statements because they're not a licensed entity. So how would you file it? They're not subject to any RBC charges or anything like that, or domestic deference or financial exams. So really, in some aspects, they're operating totally unregulated unless the regulators are actually looking at that. So the whole market conduct annual statement is looking at really the entities that are trying to play well with others, because we're trying not just to make sure consumers are protected, if you follow, we want to make sure they're all protected, they're buying a policy and so forth. But we also want to make sure that the insurance companies that are really trying to do it well aren't at a competitive disadvantage if you allow other entities that aren't playing by the rules to basically undercut. Because, what's the regulatory compliance? You follow where I'm going. So that's why we kind of got into that space, making sure the entities had filed rates that were approved, making sure that you actually had licensed producers marketing this, and better yet, let's have an underwriting company that follows the laws and regulations of the respective states.
So we've actually taken a number of actions as well. We may find one company for slow claims handling and insufficiently clear notices to consumers. These were all prior to the Pet Model Act being enacted. So all of these actions were taken under other statutes, usually the Unfair Trade Practices Act. I think that was probably the major one. This one was under the rebating section. So we found multiple companies advertising, hey, come to us, buy a pet policy, we'll give you a $50 gift card. When it's tied directly to the policy, that's rebating. You can give out as many $50 gift cards for free that you want to as advertising, but that's not what's happening here. So we took actions against 2 companies that were doing that. And other than that, we were not finding as many unlicensed, but I think Washington started earlier than we did. So just anecdotally, I feel like the market might be getting a little bit more professional, and most of the companies selling the products are properly licensed.
Well, especially since I started calling up some of these entities and I said, hey, did you realize you're on Groupon for a $50 discount if you buy X, Y, and Z as a reduction in premium? And they're going, huh? And I go, was that filed with your rates? And so, because the idea is we're trying to educate entities too, if you follow. So usually when you get to the enforcement perspective, that's further on downstream. We try to educate these entities, and since maybe they hadn't been looked at prior, you would think that they would kind of understand what the rules and regulations were. But then again, that's why they came back to have a model law.
Yeah, and as John mentioned, there is a trade group, NAFIA, and I believe that group is trying to get more compliance among their members. These are 3 other states that took actions. New Hampshire had some unlicensed activity. California, which is the state that was out there first, I think their law might date to the 90s or 2000s. And they reached an agreement concerning rating and underwriting, and Florida took an action against a company for unapproved rates. Okay, so that's all we had in our presentation. Do you have any other comments? So we can ask, does anyone have any questions? Yes.
Do you know approximately how many pet insurance writers there are in the U.S.?
We think there's about 30 statutory companies. That's our best estimate. We will know much better when the financial reporting comes in, but that's our best estimate, the ones that we've really been able to identify.
Yeah, and by that you're talking about companies that are actually writing it, underwriters. When you've got all the brands out there and so forth, it makes it really muddled. So.
Yeah, I was referring to statutory companies, Sarah, so I was not, because a statutory company might write for more than one of the marketers, right? So you might Google it and it might say, pet insurance is us, and, I love pets, and that might be the same statutory company. But we think there's about 30 statutory companies.
Okay.
We have a question in the back. Well, Brenda, you're there, but I think I saw her hand
And then
go.
I'll hand it over. But
What's that? Okay.
did I miss it, or did you say, do you know anything about loss ratios?
So we did not have the information broken out. Most of the information we were getting until the blank statement changed was anecdotally from industry. I'm not sure that we have specifics on loss ratios. Do we, John?
No, well, it's pretty easy to calculate because we actually have the MAP-Ts out there, but that doesn't include the combined ratios, things like that. It'd basically be the direct loss ratios.
We should have much better information for calendar year 25 because of the reporting, but I'm not sure exactly what the loss ratios are right now. But we would expect the same as any other P&C company, unless industry can tell us why their product is different from an auto or a home.
Got a question here.
We have a question over
sorry.
here. I think this is the first time we'll come to you.
How would a consumer figure out if a company is licensed?
So in my very small state, but I think this is the case in most states, you can just go to my website. And every property and casualty company that's licensed in Rhode Island is listed there, and life and health. I think most states have that.
Yeah. And then if you're really curious about the entities that write, we have the different ratios that are aggregated, but again, kind of the challenge is we don't, with MCAS, break out what the specific company is for public disclosure, if that makes sense. So there's some that are just true monoline companies, that's all they write. But then, as I said, some others are all P&C that they write multiple lines.
For the 17 states with the NAIC model, by the way, one of the requirements for consumer disclosure is that you disclose the statutory company.
Yeah.
So even though if you just Googled it, it might be a little confusing who was selling what, there is a requirement in those states that the statutory company be listed. What I've seen is something at the bottom, which you see a lot like with MGAs, saying, underwritten by so-and-so.
Yeah. Or so-and-sos, because
Yeah,
some
there
of these
might be more
brands, there
than
may be
one.
2 or 3 underwriting companies.
I'm just curious how a pet insurance would fall into the category of marine insurance, and if that is going to stay or some standard process will need to take place to define what product it is.
So the way that financial reporting through the NAIC lines happens, if you're miscellaneous property and casualty, so anything that isn't specific, you're inland marine. And that's a continuing problem for some of these smaller lines. We just don't have a specific reporting line for it. There's all sorts of stuff in that inland marine category. It's not what it sounds like. It's not just boats.
Cell phone towers,
Yeah, all sorts of
bridges, signs, like commercial signs attached to buildings that could be moved. So things that could be considered transportable kind of fall in that. And that's different than, say, ocean marine, which is dealing with like hulls of ships and aeronautics and things like that. So that's kind of the challenge is, folks are saying, well, it's inland marine. It acts like a health thing. But we also run into kind of the same thing with travel insurance, where we have travel policies out there, and I know this is kind of outside of the scope, but they have health components in them as well for people who are, maybe patriots are going to come back into the country. You get hurt when you're in Germany traveling, things like that.
It is a challenge. It's a challenge for financial regulators too, because as John notes, everything in this inland marine bucket, it is not consistent. It does not act the same. So if you had a homeowner's bucket or a property bucket, and you're trying to figure out the solvency of the company, that product is all going to act similarly.
Yeah.
That is not true with inland marine. So there are a lot of challenges here. We could sit there and parse out every separate line, and maybe that's the future of financial reporting. I don't know. We just cut out this particular line because of the growth there and pretty extreme consumer protection issues when you look at the products that were being sold before regulation.
But your financial state page would be huge if you start
You would.
parsing it
there's-
out.
You have to balance both of those. So.
Yeah, Maryland piggybacked off of Washington with Trupanion and American Pet, probably around 2020, we had a consent order as well. But I was just wondering, when we did our investigation, and it seemed like we did a little bit of research into the pet insurance companies, and most of them seem to be out in like Oregon and Washington areas. Is it still the case?
No, I know of one major company that's on the East Coast. I think definitely it did start in California. So veterinary pet insurance was in Orange County, California. I was actually practicing law there. And then, so that might be the reason that you originally saw West Coast, but I know at least one company out in New Jersey that's writing it.
Okay, thank you.
Yeah, and American Pet used to be, well, it's domiciled in New York. So,
Oh, okay.
yeah, they write it out of, their head office is Seattle.
I'm not being familiar with this product. What kind of rating factors are companies using with this?
They're actually looking at it kind of like a health product. So in some aspects, you know, I have to slow it down because they'll actually hire people from the health side that worked for, say, some of the Blues, because the actuarial values, I mean, they're more compressed if you get it. So pets aren't living to 77 years or something like that, but it behaves similarly. So if you have, you know, different congenital anomalies, you know, certain breeds they're kind of predisposed for certain type of conditions, if you get where I'm going. So in some aspects, it's kind of the way health insurance used to be before the ACA, where they could kind of do medical underwriting. So there's some components in that regard.
Yeah, so an elderly pet is going to be very difficult to insure. If you get him in as a puppy, you're still going to have problems depending upon the breed.
And then pre-existing conditions could happen rather quickly too. So there's those challenges.
Question?
Way on the far right.
Yeah, we did have a question come in from the virtual audience. And the question, two questions. How is pet insurance rates reasonableness being evaluated currently? And have there been any significant consumer complaints on pet insurance pricing?
So again, I'm from a very small jurisdiction, but how are we looking at it? We're looking at it like any other product. So we require the filings, the loss filings. We require actuarial analysis on your rates. We require, just what we would require for an auto or home policy. As far as consumer complaints, all we were receiving is a lot of confusion. We also had some policies that really probably weren't providing a lot of value. This is pre-model law, right? Before there were any standards. And we also had confusion on the wellness. So if you look at the wellness component of some of these, it looks like a FSA or an HSA. It's not. You don't get the money back, right? So in an HSA, you put, say, $1,000 in an account. If you spend $900, the $100 is yours. That is not the way this works. If it's $100 and you spend $90, you spend $100. So.
Yeah, and the actuarial values are actually looked at by the different respective states. So actuaries are going through to make sure that the rates are supported. Regarding complaints, which is an interesting situation, premium is growing, exponentially, but it's not like at the same level as auto or home or anything like that. So if you're talking about the single number of complaints, it's not that high. The complaint indices really aren't, too out of whack compared to, maybe some of the complaints that were coming out with like auto, where renewal rates were going stratospheric in that regard. But now we actually have a way to track it. There is going to, though, as this product matures, a chance that complaints are going to go up just because the premium volume goes up. So it's, again, trying to track, are we talking about the single metric of complaints? Well, as premium goes up, you're going to have pretty much the same slope, arguably. So if complaints start exceeding that, then that's going to be a different issue. But now the regulators actually have some information that they can actually reach out to these entities and try to figure out, get some clarification on the context of what maybe the claim handling process is, or the underwriting or the marketing practices. Because sometimes the consumers, honestly, they will complain and you'll have like 5 or 6 reasons for the complaint, and you're trying to figure out, well, how's it underwriting, marketing? They just click all the boxes, if you follow. And so you go back to the company and try to figure out what reality is. And sometimes the story is considerably different. But anything that would come into the respective states does get looked at.
This is also a voluntary product. And as far as the volume of consumer complaints, at least in my experience, it is in what I would call a non-voluntary product. So auto is mandated by statute in every state but New Hampshire. Homeowners is mandated by your mortgage holder. Consumers consider those things that they are required to buy. And so we get a lot of complaints on rate increases because they don't feel like they have a choice. In a product like this, if the rate is too high, they won't buy it, right?
Or as the numbers represent, they canceled.
Or they're canceling,
Yeah, so.
Thank you. I have a question about what you've seen in the way the benefits are structured. And if, we talk about an event the animal might have or an illness, if there are sublimits or caps or max amounts that are paid. And then also, if that is the case, are we considering how consumers can compare the different products and what the benefits are?
So the answer is yes. There's every product is slightly different. And one of the things that we discussed a lot in the development of the model is there was a lot of advocacy for mandating certain covers within the policy. Had we done that, we would probably have priced out a lot of people that might want a lower level of coverage or not be able to afford the higher level of coverage. So in the model, it's not specific on companies are allowed to have various sublimits and various coverages. We haven't gotten a lot of calls yet from consumers on how to compare.
Yeah.
I hate to say that I would suggest reading your policy, especially with Professor Kuhn in the back. But we haven't gotten anything yet that we've looked at that we've said, oh, no consumer is going to be able to understand this. And I think we will be keeping our eyes out for that when we're looking at forms.
And a lot of these are sold online, so there's a web interface. It's a brand, if you get what I'm saying. It's not quite like the old days where you actually had the agent come to your house and sit at your table and compare, spreadsheeted it out or like that. You could probably go to an independent producer, an agency, and have them, that's the task, and they could kind of spreadsheet it out for you. But by and large, we're seeing a lot of this is actually going through web portals. You click a link, put in the breed, put in the age of your pet, and it'll spit out a quote and then ask for additional information. Though they do oftentimes will ask that you have your pet examined by a veterinarian up front, which, I guess in the old days, if you were going to insure your car, you would take it to your insurance agent and they would kind of spot check to make sure that that is really the 1977 Malibu or something that you really insured. You're not trying to swap it up. But in this day and age, that doesn't often happen.
We actually had that law in auto until about 8 years ago. We finally got rid of it, but you literally had to take your car to an agent who looked at it. I think we're going to see, I think there's room for innovation in the products here, but as a consumer purchasing these products, I would be very careful that I understood what was being offered in the product and what was being covered. It is not going to cover everything, so be very careful.
So just a couple of quick comments. Pet insurance is one of the most popular employee benefits. So just to throw that in there. And I know that medical credit cards are outside your regulatory scope, but the folks who are trying to figure out how to pay for these expensive treatments or care for their pets are also looking at medical credit cards. So any sort of consumer communication, education that you do about pet insurance, I think should acknowledge medical credit cards, which can be in people's interest, and then they cannot be, depending on how they're structured. So
yeah,
just
that's a
for
good
those
suggestion.
who
We
are
hadn't really thought of that.
looking
but
at communication.
if you don't have the pet policy and you do go to the emergency vet, as I have, and they say, well, that's going to be about $5,000 or $6,000. the credit, they have them all over the counter. You can pick up all the credit cards because it's that, or you might lose your pet.
Mr. Helder, we're almost at time.
I think we're at time.
We got about 15 seconds left, so well done, audience, with the questions, and obviously the panelists as well. Thank you very much.